Alright, so some days back, someone asked me how am I using the Asia range to take trades using the Pro Trend playbook. If you have noticed, on the previous video, I used the Asia range to explain the counter trend playbook, or how I took that trade. Of course, it was a counter trend setup. And so he asked me, how am I using this Asia range now to take a trade on a Pro Trend playbook? And so today I have decided to answer him using a trade breakdown. So without further ado, let's dive in. Alright, so I will start from the 15-minute. I will not start from the daily so that I cannot make the video long. So starting from the 15-minute, you can clearly see like all the things that I have marked. You can clearly see that all of these are just swing points, so meaning we are bearish, and you can clearly see you have been making bearish breakout structures. So this explains why we are bearish. And of course, this one here will be the current trading range. As you can clearly see that this one here was the inducement. In this case, it was the major inducement. Then price made a breakout structure. Probably I explained the breakdown of this in a video some time back. Yeah, you can check it. So today I will not be diving deeper into how I came up with this one here being a sweep and all of that. So all right, in this trading range, you can clearly see I have marked everything that we need: the extreme order flow, the extreme order block, or the origin order block. You can clearly see the decisional order flow exactly right here. Why the decisional order flow? Because it is the one that actually caused the break of structure, or the swing that caused the break of structure. This one here is the decisional order block because it is the one that caused the break of structure. This one here is a weak POI because it occurred after the break of structure. So you can clearly see everything is simple. Of course, this one here was the recently formed valid pullback high, so that counts as our major inducement. And of course, the pullback that comes right before the extreme POI, of course, I mean this, the pullback that comes, the pullback high. In this case, since we are bearish, I'll be focused to the pullback high. So the pullback high that comes right before the extreme PY, it's of course now the engineering liquidity. I mean that high, the buy side liquidity, that's the engineering liquidity. All right, so, and we said, or if you have been watching my videos, you know that the engineering liquidity is a core liquidity, and a sweep from it actually makes, it can actually cause an ultimate move all the way towards the external liquidity. So this means that the engineering liquidity sweep is a valid entry module, and you can clearly see right here price has done that, has taken out the engineering liquidity and is showing the moves to the downside. You can clearly see we are on the second leg. You can see right there, so price is ranging inside the second leg. So to get more data or more information of what is happening here, we will need now to shift to the lower time frame. Of course, that is the 3-minute. Right, so onto the 3-minute, you can clearly see here this one here is the engineering liquidity, and this is the data, and this is the second leg and all of that. So now let's mark what we are seeing. So we said that after an interaction with a higher time frame POI or a liquidity level, we mark this one here as a change of character. I mean, the inducement changes its role from being an inducement to being a change of character. All right, so we can clearly see that this one here is the major inducement, and we can clearly see that price has already taken that. So that's the, yeah. And the reason is why I said we are on the second leg. It's because you can clearly see this is a second break of structure. So this means that we have a new trading range, of which this one here is the high, and of course the low is none other than this one here. So with that trading range, now we can mark the usuals. Of course, the inducement, and you can clearly see this one here is the minor inducement. Why minor? Because it occurred before the break of structure. And of course, if that's the minor, then this explains why I'm using the external liquidity as our major inducement. This is something very important, guys. Yeah. So the major inducement, it will be the external liquidity. Of course, if I am to mark the POIs, I can clearly see that this one here is the extreme OB, or the extreme order block. In this case, I'm not focused with the order flows because we're actually using the minor inducement. And not only that we are using the minor inducement, but we can actually see that this one here is the order flow. Look, this one here is the extreme order flow. So it will not be making any sense me using it, because actually you can see the minor inducement is somewhere there. We said that it doesn't matter if this corrective leg is a one push, like two leg, three leg, it doesn't matter. We are only focused with the corrective move. I mean, we are only focused with the impulsive move. We don't care what, even if like the corrective leg was just a one push with one big candle, it doesn't matter. We are only focused with the impulsive move. So you can clearly see that's the, yeah, that's the extreme OB, and of course this is the rejection block. So I can clearly see that that's the rejection block. So I'll use the color green to signify a rejection block. Yep, exactly right there. That's the rejection block. So price mitigated the extreme. As you can see, it mitigated the extreme OB, gave some reaction. All right, let me do this to input uh, this color in here. All right, so you can clearly see here price mitigated the extreme order block, gave some reaction, but then later you can see it failed it, and mitigated the rejection block, and price is now giving this move to the downside. And we can clearly see here there is a major inducement up here. So this also says that the rejection block, I mean price, can decide to fail the rejection block and go for the major inducement. So all right, let me, yeah, you can clearly see I have my Asian range here, started here. And all right, let me continue running price and see where the Asia range finally closes. All right, so as you can see, we are still in the Asia range, yet I have not, like, exactly, we are now out of the Asia range. All right, so let me continue running price until my trading window. All right, as you can see there, I'm expecting a buy. Why a buy? This one here, you can see price has taken out this, made a break of structure, another break of structure exactly right here. This one here is the inducement, this one is the engineering liquidity, and you can clearly see price has taken out the engineering liquidity. This one here will be the extreme. So if price fails that engineering liquidity, probably it will be looking forward for the extreme bull OB. But you can also consider this. So I'm inside my trading window, so this means that I can actually take a trade here if I see one. But I didn't take this was a trade that I took some days back, but I didn't take this upward move because of this one here is also I mean, is also a bearish valid reaction. So price may decide not to take this Asia high or this major inducement and decide to actually push down and down and down, and this will be a silly trade for me. All right, so let's see here. All right, let me run price, and you can clearly see price ended up higher towards the liquidity pools, of which is the Asia high, which is this one here. So you can clearly see that this one here is the Asia high and eventually the major inducement. So I'm anticipating now, if now I see a sell towards you can see if now I see a sell there, because I can now see like price has taken out this Asia high and also the major inducement. So this means that I can now look for the sell without any worry. All right, so now let's see what price will do after here. And as you can see, price is now heading down exactly after it has taken out the Asia high and also the major inducement. So probably now it's looking forward for the Asia low and of course this external liquidity. So you can clearly see this POI failed, another POI here failed, but now price, and why did this POI failed, or why did I anticipated that this POI will fail? Because of this Asia high above here. So that's the reason. So this explains as to why I'm not interested for this sell, because obviously I'll place my stop loss there, or maybe some few pips above there, and probably I may not get I mean my sell will still be safe, but not that safe, because let's say now another day price decides to sweep this with a very long wick, and we don't know how like we don't know the size of this wick. So probably even if I extend and extend, you can see price can just wick me out, and you can see I will have missed a nicer trade. Also, this is the reason as to why I decided to make my trading range, I mean make my trading window after the Asia range, is because of things like this. So you can see now I have waited for the Asia range, I have seen the liquidity pool, and this makes me now confident to participate into this trade. So you can clearly see all of these bearish moves. Probably I may be interested for this inverse fair value gap. So let me actually do something like this, so you can see the inverse fair value gap exactly right here. I'll use this here so that you can clearly see that. So some usually use the 50%, so I'll place my stop loss some few pips above. But I will recommend just using this, or just using the reversal patterns. Actually, after price has made such a good like 3 candles to the downside, you can use that. So again, of course, the target profit should be something reasonable. So coming back here, we can clearly see that yeah, this one here will be the TP1, or the first take profit, I mean the Asia low. Or yeah, you can extend, of course, to the external liquidity, or even to this order flow here, exactly right here. Why am I using this order flow? Because when we get back to the 15 minutes, all right, so exactly right here, you can clearly see price took this low and break past this. So this means that this order flow has some I mean that price, if price makes it out to this order flow, there will probably we will see some reversal reaction here. But I'm not anticipating the reversal reaction to be that big all the way breaking past this, because this is actually the corrective leg. So yeah, so this means there'll be some reaction, and then, but we are not here to wait for price to make the reaction, and then no, I just want a tap and go into my full TP, or into our full TP. So I usually don't make my take profit that that far. Mostly I usually use the 1:3, so probably mine will be somewhere there. Yeah, a 1:3, and I'm good with that. But anyway, since this is a pro trend, you can extend it there. Yeah, so that's 1:7, and as you can see, this was just a tap and go. Yeah, such a nice trade. No, like you can see price was actually extending so much. Great. And eventually we can clearly see that price made it out to full TP, exactly right there. So this was a very nice trade, a very nice trade. So that's, guys, so that is how I'm actually incorporating the Asia range into my pro trend playbook. Of course, the pro trend playbook will have trades that uh, have like higher risk to rewards compared to the counter trend playbook. But we know that in the pro trend playbook, price tend to move very fast. So that's the reason as to why we actually use the counter trend playbook. And so yeah, I will end the video here, and I know that you have learned something. So drop a like and see you in the next video.